Bitcoin mining going to be the topic for today, and we're going to dive in, of course, on one of the miners that I think is leading the way on maybe innovation, but really where the structure of Bitcoin mining might stand here in the future. So we'll break it down for you guys. It's going to be a good one. My name is Paul Barron. Welcome back into Tech Path. Joining me is Asher Genoot, who is the new CEO over at Hut 8. Great to have you.
Thanks for having me. Appreciate it.
So I just found out, Asher, you're here in Miami, not too far from us. We should have done this in person. So next time, for sure, we'll get together. Let's talk a
That's
little
right.
bit
Looking
about,
forward to it.
for sure. Let's talk a little bit about the merger. Obviously, now we've got post-merger. A lot happening out there in general. You guys have switched CEOs, coming over, of course, from Jamie Leverton. We've had the Hut 8 team on our show multiple times. Give me kind of a framework, first of all, of what your new mission is under Hut 8.
Sure. The goal, the short-term goal that I've announced is three things. We're going to maintain a strong balance sheet going into the halving. We believe that there will be opportunities that'll be accretive to invest. The second is we have opportunities where we will be investing into growth. And we just had a press release come out earlier this week that we have a new facility that we've invested into, and we've had a new treasury management strategy that we've deployed. And then the third, which is equally, if not the most important, is driving efficiency and growth across the business. And so as a company grows, inefficiencies naturally accumulate. So we've been going through every single site, every single machine that we have, all of the business units, all of the cost centers, and really figuring out how to drive efficiencies across them to drive cash flow in the business.
So when you look at improving efficiencies, Hut 8 has been, I would say, notorious for having some of the best low-cost energy globally, as you guys have deployed a variety of different, facilities. How is that strategy moving forward? Because obviously we know that the Bitcoin halving is coming. The hash rate is going to, of course, increase in terms of the capacity to produce a Bitcoin. What is the strategy going forward on Bitcoin mining?
Yeah, so in terms of the assets that we have today, on the Hut 8 side of the merger, when we came together, Hut 8 had 3 Bitcoin mining facilities, one North Bay that was shut down, so 2 operating, 5 traditional HPC data centers, and then a portfolio of power plants, 4 power plants that just closed through the Validus acquisition. And then on the US side, we had facilities that we owned and that we operated. And so those facilities are on 3 verticals. It's on the self-mining business, it's on the hosting business, and then it's on the managed services business. So on the Hut 8 side, it was basically over 100 megawatts of self-mining infrastructure, not including North Bay. And on the US side, 730 megawatts pre the Celsius transaction that closed, which now brings us up to over a gigawatt, over 1,100 megawatts with the build out of the Cedar Falls site we're building. So bringing all of those assets together in the new post-amalgamated world, there's some assets, for example, one of the facilities, Drumheller, it's been very public that Hut 8 has talked about that there were electrical issues and increased power prices. And so I think what people have to understand is as the journey of facilities evolve over 5, 10, 15 years, the dynamics of those power markets evolve as well, right? And so it's us looking at every facility and figuring out how do we drive down costs, and in areas where costs don't make sense and the facility has been retired and has already met its useful life, how do we reinvest that capital elsewhere and deploy growth elsewhere? And so very focused on being the most efficient and lowest cost operator in the space. And that's why when we think about growth, it's very methodical in investing in growth in the right way so we can be a low-cost operator. There's a growth at all costs versus a growth to drive return on shareholder value.
Yeah, I would totally agree with that. Bitcoin halving now 47 days out, looks like it's going to be around April 18th or so, which has moved up considerably. You're talking about growth. There's also been a little bit of, I won't say, well, I guess, yeah, in essence, you're kind of restructuring from an overall strategy from a Bitcoin side of things. Are you planning to do any additional outreach or acquisitions that would increase your hash rate capacity?
Yeah, we've mentioned we're very active within the markets right now. We're looking at opportunities both for organic growth and building our own facilities like we just announced this week on a smaller site, and then also for M&A activity as well. When we look at opportunities, really it's for every dollar that we deploy, what is the best return on that dollar? Sometimes, and a lot of times, is building our own facilities. And other times, when people are looking to sell facilities and they think 1+1 is greater than 3, they're willing to kind of combine as a part of a larger platform. And so for us, it's this year is going to be filled with opportunities to invest capital and being thoughtful on how we invest the money on our balance sheet. So today, the last announcement on our production report, we shared for January, we have over 9,100 Bitcoin. When you look at the value of 9,100 Bitcoin times over 60,000 Bitcoin price, that's almost $550 million of Bitcoin on the balance sheet. And so that plus the cash flow of the assets we own, we feel very confident in kind of the strength of the business today, the strength of the balance sheet, and being able to kind of take advantage and maximize the opportunities that we believe will exist.
So this press release that you did here, most recent one, the construction of the new digital asset mining site, careful use of the word digital asset. Now, this is going to give you guys another, 3.6 exahashes, it looks like. Overall, does this mean that a site like this would be dedicated to something other than Bitcoin?
So this facility we're building for Bitcoin mining, it has a capacity of up to 3.6 megawatts. We haven't announced if we're deploying new machines or we're moving machines around to lower costs. So we also said in that press release, if we move machines from other facilities, it actually lower our cost of mining Bitcoin by 30%, which is equally as important as growth in new exahash. And so when we look at these energy assets and when we look at the vision of the company, the world in the consumption of power will only increase, right? With electric vehicles, with more data centers, AI, Bitcoin mining, battery technology. So the demand of energy will continue to increase. As we grow the business and we continue to consume and grow large infrastructure projects, we'll assess what is the highest and best use of that power at that facility. And so over time that will evolve. And so we call it a digital asset facility because today it's Bitcoin mining. In 5 years, that site may be the best use case for a different type of technology, and the Bitcoin mining facility would move to a different place that has lower costs, that's more competitive for the dynamics of that space. As you know, Bitcoin mining is extremely volatile with hash price, with energy prices, with machine efficiency, and you have to be agile enough in order to react to the markets, and you have to underwrite these investments to understand kind of the life cycles of these markets to be able to really return capital. I think today there is a focus on growing and there's a focus on the cash flows that growth brings. But I think what is missed is what is the cost of that growth? And the analogy I love to use is if real estate, I think everyone understands, right? And everyone is very familiar with, if you buy a home for $1 million and you rent it out and you return, let's just say, call it $50,000 a year, right? And you have a 5% kind of return. Now, if you buy that home for $2 million and you still return $50,000, now you have a 2.5% return. It's double as long to pay back that capital. And I think that's really important because building infrastructure is not cheap. Buying miners is not cheap. And so when you look at, is this investment worthwhile? It's, do these cash flows pay off the cost of your capital, whether you're raising equity or debt? Raising money from the equity markets and diluting shareholders is not cheap either, right? So what is the cost of that capital you're investing? What is the infrastructure that you've spent? And then after all of that, did you make money or did you lose money? And I think those first principles of investing are really important for people to remember and to focus on, because that's how you are able to manage through these cycles of volatility and not basically go through what happened in 2022 where people invested a lot of money and couldn't pay back a lot of that infrastructure. And obviously the debt markets were high at that point, so many people went bankrupt. I think the markets we're in today, it's much more equity driven. But it's important to notice, like, if you invest $100 million or if you invest $1 billion, how quickly are you paying back that money?
So I guess when you look at just growth in general, especially in the mining space, we have the big conference down here in Miami where all the miners come together. I was at I think it was not last this most recent one, but the year before. And it was intriguing to me to see, one, the number of miners that were active versus what is actively going on right now. With the fact that we have seen some consolidation, I guess my question to you would be, does Hut 8 plan on selling any Bitcoin off the balance sheet to be able to finance some of this growth with the current capital markets the way they are?
Yeah, so in the recent press release we announced earlier this week, we talked about a new treasury management strategy. And so we bifurcate two decisions. Decision one is is there a good investment for us to deploy capital? So that's decision one. Then is what is our cost of capital? And we have 5 levers to be able to pull money and invest. Lever 1 is we can raise money in the equity markets. Right. Lever 2 is we can raise debt, right? Equity in the equity markets is expensive because we believe that our valuation obviously has gone down a ton. And so we believe that the cost of the equity is expensive. Debt is, in our minds, not smart. Taking on corporate debt going into the halving and maintaining a strong balance sheet is critical. Project level financing, equity and debt on the project level with no parent recourse, we've executed in the past. And we believe that's a really interesting model in terms of growing. It's good for some investors and what exposure they want. It's good for our company in terms of a non-dilutive, risk-adjusted way to grow. And then the other 2 is you can sell the Bitcoin stack, but also you can manage option strategies around the Bitcoin stack, right? We're in a very bullish market today. There's covered call options, costless call options. There's ways to be able to pull money off the Bitcoin stack, like we did the Coinbase loan, without actually selling and maintaining that optionality. And so we look at all 5 of those levers, and at any given time, we'll see an opportunity, say this is a great opportunity to invest capital, and then figure out what is our cheapest source of capital. And that ebbs and flows based on the valuation of our company, the debt markets and interest rates, what project level financing is out there, where Bitcoin pricing is, where the option market is at that time. And so that announcement that we made this week is we will be agile and make the best decision with our executive team, with our board of directors, to be able to maximize the value of our investments and to drive our cost of capital down.
Well, I think the key there, in your long version of that answer, the way I perceive it is that selling Bitcoin would be one of the last resorts that you would look at with all the other options that are available to you, to be able to grow the business.
Exactly. I think it's investors invest in us to get exposure and to get levered exposure and to get the best return. And so if Bitcoin is the cheapest cost of capital, then we're not going to go towards a different cost of capital that's more expensive, because we'd rather invest our cheapest cost of capital, right? Historically, Bitcoin has been an expensive cost of capital, which is why it's held on the balance sheet. But less so of a religious belief. It's let's make really good business decisions and really good investment decisions, because over a long period of time, then we'll own a lot more assets on our balance sheet.
Yeah, and I think when you consider that, and then you look at this story right here, Bitcoin halving will benefit publicly listed miners. This is coming from JP Morgan. So they're looking at the potential here that it is going to benefit the publicly traded miners like a Hut 8 that is going to benefit from this, because we're probably going to see a little bit of a washout in the system, maybe some consolidation and continued support, especially in the publicly traded markets around, whether you want to, hedge your bet with the Bitcoin ETFs or direct exposure to Bitcoin, or just go into some of the companies like Hut 8 that, of course, benefit from that in terms of the market going up so dramatically. So I think that would be, to your point, still beneficial, to kind of continue to just stack sats.
No, look, I think that's right. We have a large balance sheet, and I think that's a strength. And what investors have wanted, and that's why at the beginning you called it a restructure of sorts, what investors have wanted to hear, and what I've gotten a lot of feedback is, okay, you have all of this Bitcoin, you have this strong balance sheet, where's your growth? Are you growing? Yeah. Are you efficient in your operations today? And so right now my job is a 2-pronged approach. One is, how do we make sure our operations are extremely efficient and we make hard decisions to drive down costs in areas that historically haven't been performing well? And then the second is, how do we look at opportunities to invest and to grow the business with the balance sheet that we have? And so we hear our shareholders, we understand what their perspectives are, and we're committed to making the right decisions for the business and to growing and to investing into the business and building strong inherent intrinsic value in this company.
What do you make of this analyst, Nicholas? I don't want to pronounce that last name, but he believes that the Bitcoin network could experience a 20% drop in hash rate post-halving. This would put production cost range could drop to around 42K. Do you feel like that's pretty accurate in terms of what you guys are seeing, forecasting the potential of production cost?
Yeah, so I think the amount of people mining in the network is difficulty, right? If Bitcoin continues to run, then I think there's going to be less people that shut down, right? And so it's really relative to Bitcoin price, because at the end of the day, when we look at our revenues, it's hash price. And hash price is a derivative of 3 things, as you know. It's Bitcoin price, it's difficulty, which is how many other people are competing, and then it's your network rewards, which is getting cut in half. And so When the network reward gets cut in half, if all the other variables stay the same, that means you're making half the amount of money that you were otherwise for the same cost of energy, which wouldn't work for many people because their costs are higher, right? And so either Bitcoin has to go up or difficulty has to go down in order for hash price to remain where the market can absorb that hash price. So I do believe that if Bitcoin prices, and again, Bitcoin has been on a run over the last couple days and weeks. And so if it continues to stay within this range, and if hash price levels out a little bit more and kind of normalizes, then people will shut down because you have less efficient miners within the ecosystem. If Bitcoin continues to run, then you'll have people online, you'll have more capacity coming online to increase difficulty. And so I think those are the dynamics. When we think about growing the business, it's how do you make sure you're a lowest cost operator? So if Bitcoin doesn't run, you're still profitable, you're still draining in cash, and you're still driving a good business. So then if it does run and hash prices do increase, you're just a lot more profitable.
Yeah, I was looking at Sue's tweet, which I thought was a good explanation. Step one, buy a new site, build a site for 40% cheaper than your peers, cheaper than the last site you built and sold, and then reduce costs by up to 30%, increase self-mining exahash, and boom, you've got a model for
I hope people see this, right? I'm in this role. It's been 3 weeks since I took over the job, and we made this announcement. We said, hey, we're going to be doing things. We're going to be driving by action and execution. And not only are we going to say we're going to do things, we're actually going to tell you what we're going to do, right? And so in this recent report, we told folks when we're going to build, how much it's going to cost us, how is it compared to other folks, the timing we expect it to come online. And so we want to keep ourselves accountable and go and execute and show the street that we're not only keeping ourselves accountable, we're not only telling them what we're going to do, we're actually going to execute on that, and we're going to keep on doing it.
Sure. Well, listen, the street is very interested in AI right now. And if you think about AI in general, cloud compute, decentralized compute, DePIN, all of that plays into the narrative, both from a blockchain standpoint, a lot of the projects that we talk to as well. I was looking at this tweet, 24,000 GPUs live on the network. This is coming over from IONET, looking at 18,000, almost 19,000 sourced by IONET. Then you got Render Network coming in, and then Filecoin. All of these flying out there in the DePIN side of things. When you look at decentralized physical infrastructure and the potential for that, partnerships with companies like IONET, maybe getting to the point where there could be some alignment here with projects like Render, et cetera. And then all of the potential for cloud compute and or decentralized compute that AI is going to bring to the market. Is that a huge market for you guys in terms of your roadmap right now?
It's a core pillar, right? We have 5 traditional data centers in an HPC business that we own today. And then we've announced that we have a PO out for a cluster of H100s. I think for us, is the entry point and how we invest is really important. So on the US Bitcoin side, about 3 years ago, we started the business. We raised a little over $100 million of equity capital, and that's it. And going into the merger, we had 730 megawatts, not including the Celsius assets, which is another 12 exahash and 300 megawatts of sites coming online for 100 million of equity capital, right? And so today, we manage 839 megawatts of active load, that's 22 exahash. We're building an additional 300 megawatts right now. We took over in the beginning of February, 87 megawatts through the Celsius bankruptcy. So that takes us over 1,000 megawatts. And so what I don't think people understand is we are one of the largest, if not the largest operator of Bitcoin mining facilities today, right? We have some capacity coming offline that we've announced in April, but we're a massive operator. And so buying machines and plugging them in is easier for us because we operate at scale. Because a lot of people say you need scale to be effective. We have scale, we just use other people's money to get that scale, right? And it works for us and it's good for them as well because it drives down their costs. So for AI, it's not about deploying the first 1,000 chips. It's not about deploying the first $40 million. It's when you look at the large competitors in the space, like a CoreWeave, like a Lambda Labs, and you look at those leaders in the industry today, they've deployed hundreds of millions, if not billions of dollars, right? And the companies are worth billions of dollars today. And so how do you find your unique competitive edge to be able to compete or partner in order to grow and to create a meaningful business that has scale? And so when we think about the business, what we're not doing is chasing a headline of, okay, AI, everyone should do AI. It's what is our competitive moat? How do we compete? So when we look back at the business in 3 years from today, we did what we did with mining and we become one of the largest operators or largest folks in that space, and we're able to execute. And we do it in a differentiated way. When we came into mining, we didn't say, let's go raise hundreds of millions and billions of dollars to go build basically the largest self-mining fleet. We said, let's get to the largest scale with the least amount of capital possible so that we return the most amount of return to our shareholders. And then let's go and continue to do that and continue to scale. And so for me, being able to grow a business, we don't have to be the largest market cap. What we have to do is drive the best returns to our shareholders. And again, I've taken over this seat for 3 weeks now. We've built shareholder return for our shareholders as a private company for about 3 years. And now it's our ability to now come and execute and do it in this new leadership world as a public company.
Yeah. Well, I think the cool thing is there's a lot of upside here, I think, to the right companies that are looking forward. If you just look at the data coming in from Masari, DePIN sector predicted right now to skyrocket to around $3.5 trillion valuation by 2028. I mean, that's bigger than most entire retail sectors.
And what's beautiful as well is if you think about it, one is the return profile based on where kind of the markets are trading today and long-term contracts on demand. It's very similar to Bitcoin mining return profiles, right? So from an investment perspective, it's super interesting. And you really just have to think, how big can AI get? And I look back at kind of the dot-com bubble, and if you think about today, no matter what type of business you run, no matter how small or how large, everybody has a website, right? And I see that same analogy with AI. No matter how small or how large your business, AI will somehow impact how you run and how you operate your business in the future. And so this use case is massive, and being a part of that and helping build the infrastructure layer to power the world of AI, we find extremely compelling and want to be a part of that solution to bring the world forward.
Are you finding that there are companies out there that have been able to solve this software issue? I was looking at some of the platforms that Grok, it's a company called Grok, not Elon's Grok for Twitter, but a company that basically is using server-style GPUs, but they're using software as a way to ramp up the capacity, just like you mentioned. Are you finding any of that technology now that is starting to surprise you for Bitcoin mining?
So Bitcoin mining, we've been developing Bitcoin mining technology since day one. A thesis we always had, look, most of our executive team built the business by living on site, right? I was plugging in the machines, learning. I really believe to be a great operator, you have to really deeply understand the business. You need to understand how much a wire costs, how much a fan costs, how quickly it costs to repair. So you can optimize all of these things at scale. And so one of the things we learned really, really early on was the technology wasn't there to be operated at scale because it had never operated at those scales. When we first started, I mean, we ordered 1,000 machines, and thousands of machines was large scale at that time. Today, with Celsius, we have over 300,000 machines, right? We have 200,000 we announced in January in our production report. And then with the Celsius, 122,000 machines, that's over 300,000 machines. So if we're going from 1,000 to 300,000, and 3 years ago, we had that foresight, luckily, that we need technology to be able to help us operate at scale. But what we've developed as well, so that's the operator part of our technology. Then we have the reactor, which is how well can we trade energy, manage efficiency of the machines, and how do we tweak every machine so we maximize the efficiency of each machine? Because each machine has a different vintage, has a different uptime, has different specs to it. And so I think the way that you optimize and you run these facilities is extremely important to be a low-cost operator and to drive profitability and increase growth.
Listen, it's been good talking to you. I think I've learned a lot, today about the strategy, what you guys are doing. Plus, I think also your market position, which I feel like is pretty strong right now. I'm going to do some more research on this, though. But it's been great having you, Asher. Thank you so much for stopping in today. We appreciate it.
Thanks for having me. I appreciate it.
You bet. All right, so you guys are tuned in maybe on the podcast side of things. Jump over to the YouTube channel, catch us over here. And of course, if you're not in the Diamond Circle, get in now. It's another great place to get additional content. Catch me on X. It's @PaulBaron. We'll catch you next time right here on TechPath.